Welcome to the Market Frontlines. I'm Lyndsay Malchuk. Formation Metals is apparently not just another sleepy junior hoping for a lucky hole in the ground. They're just closed a major financing that fully funds an aggressive multi-phase drill program, and they've picked up an advanced project with a historic resource that someone else walked away from. Now that makes this story loaded with promise and also full of obvious pressure points. Money to spend, results to deliver, and a history to either validate or debunk. Now, sitting with me is the man who signed the option, who raised the cash, and put those rigs on site, Deepak Varshney, CEO of Formation Metals. Welcome to the Market Frontlines, Deepak. I know this conversation is going to be full of questions direct from investors, so thanks for sitting with us.
Hey, thanks for having me. Looking forward to it.
Now, Deepak, investors hear you talk a lot about the boring sexy and how your assays and step-by-step work will prove this out. Let me cut to the point here. The historic resource you acquired is being promoted as a head start. Yet history can be a very loaded word. So who did the historical work? How rigorous was their sampling and QA/QC at the time? And what specific parts of that data set are you most worried might not withstand up to modern NI 43-101 scrutiny?
Yeah, great question. So the who is actually very easy. Agnico Eagle, Cypress, Balmoral, Walbridge. So all real companies, right? We're not talking about juniors where you might feel unreliable with the work that's been done. We are relying on the work. And they did a lot of it. 55,000 meters was drilled. They did metallurgy, almost 90% recovery. This was done by serious companies. And this is why we said we have a head start. Where do we see a gap? I think it's going to ultimately come down to what was originally thought about with the open pit model, right? We need to do more work to bring that current. But honestly, there was a compilation done in 2016 where they thought they could redo the resource with as few as 10 drill holes, just because of how rigorous the QA/QC was historically. So I think we're in a very good spot to start our own work here.
So to follow up on that, then, you have publicly said you will review old core and re-assay material to hunt for additional copper and zinc potential. So if historic base metal assays are weak or incomplete, what's your plan then to prove continuity of those metal systems, and what would it mean for your exploration targets and economics if the copper-zinc opportunity just isn't there?
Honestly, nothing, right? We feel this is a very strong polymetallic project. Obviously, the historical work has been focused on the gold. We've reviewed the old drill core. We've reviewed the old assays. Look, this is a area which is very well endowed with VMS deposits. We're very much in the heart of copper zinc country. And that's why we feel there's a strong possibility to find something along those lines here. So for us, finding a strong copper zinc zone is a brand new way for us to increase value for our shareholders, right? End of the day, look, people look into this project as a gold first project. We think it's got a great copper potential, but if it's not there, that's okay. You're right. Geology is hard. Our job is still see if we can find it. We've seen evidence that show that it exists. We know Agnico found some evidence in 2008, so that's what we're following up on to see. But end of the day, look, the gold is strong enough to carry this project on itself.
Well, that's good news right there. Now, for those that may not know a lot about the company quite yet, can you give us your elevator pitch on what the project is and some key milestones that we're looking at right now?
Well, we're deep value right now, especially right now after this last financing. We closed it at 37 cents. In the summer, we were raising charity flow-throughs at 50 cents. Look, we are at $28 million market cap right now with just under half of that in cash, right? So it's rare to find a junior explorer at our level with this much money in the till. And of that, we have over $8 million allocated to exploration in the next 2 years. We're fully funded right to 2027. And so we're taking on a project that, ultimately everyone says about creating value. We bought this property for just under $1 an ounce, right? We bought this in a different gold market when people really weren't looking at gold the way they are today, obviously. For us, we've been gold bugs for a long time. We saw an opportunity to take a deposit. And this is very much, I think, a mine in the making, right? If you look at this project, what you notice right away is, what you allude to the boring sexy is this deposit is open along strike at depth. The gold is shallow. It starts at surface. Really, the bulk of the gold they found was within the first 200 meters vertical. Our own drill program really isn't touching below 200, 250 meters vertical. Why? Why would we go deeper when we know there's gold all over the place? Right near surface. 84% of the holes in the A zone came back with gold mineralization. And so for us, What we're really trying to accomplish here is take that 20,000 meters and go out and grow this to what we think is to be over 3 million ounces, right? And so the biggest catalyst coming up now that we started drilling, assays. We're not going to have, we're not going to stop doing field work. We have to spend the money now, right? So assays, and then really a big resource estimate coming up, our maiden resource estimate coming up in 2026, right? So our goal is to take this historical estimate, which we're relying on, which we think is very valid. It's just under 900,000 ounces. And what we'd like to see is grow this step by step, right? So you're not going to get to 3 million ounces tomorrow. You're going to go to 1.5 million ounces, then 2 million, then 2.5. And so for us, this first program really is designed to A, go validate the historical work done, and B, we firmly believe, look here, this is the cool thing with this project. With the A zone as an example, they were very much focused on the highest grade possible. Gold in the 90s at $400 an ounce, $500 an ounce. In 2008, when Agnico drilled this, it was $800 an ounce. It's a different environment where we are today. And so for them, wherever they could find the highest metal factor holes, because we have holes that are, gram meter, 90 gram meters gold, right? Very good holes, 50 gram meter holes, 40 gram meter holes. They were not going in between what you would call infill drilling to build out this resource, this block model. They were looking to just focus on the high metal factor intercepts. So what would be infill for most projects, for us, is actually discovery drilling, because we are drilling in the middle of the deposit outside of what they called the resource historically. And that's awesome, right? Because that's actually really low hanging fruit, right? Also, when we see is going to the west and to the east, you see they had a lot of hits that were 20, 30, 40 metal gram meter holes that, again, they left behind. Stranded holes, because for them, the grade wasn't there, right? I mean, if you were Agnico starting on a project today in one of their grassroots exploration projects, and you said, hey, we have 1 million ounces at 1.5 grams at surface, they would be all over that right now, right? And it's our fortune that we were able to take this on when gold wasn't in favor. And now we have this project fully funded for the next 2 years. So if you're an investor, what better time to come take a look at this company, right? It's trading at an attractive valuation, a cash basis, almost 20 cents cash. Our EV for the historical resource is around $10 an ounce, which is incredibly cheap compared to our peers. We're fully funded, so the only way you can buy stock is out of the market, not the treasury, which is what I think what you want as an investor, right? A lot of the companies say that they can go out and buy an option and do whatever, but we actually fulfilled 6-year option within the first year. We have the money we need to actually go to 100% right now, right? And that's because of the tremendous support we received this year. So, that's a bit of a long elevator pitch, but that it really is the story. It's very simple. We have a lot of money, a lot of meters to go, and great pedigree on this project. And we think it's going to be a 3 to 5 million ounce story.
Well, what's the saying? One man's loss is another man's win. So congratulations on that. I want to shift here just for a second. As mentioned, you just closed a significant private placement and upsized financing to fully fund a 20,000 meter multi-phase drill program. That's a big voting of confidence from investors and also a ticking clock for those results. So walk us through the concrete quarter-by-quarter milestones you now need to hit in the next 12 months to avoid meaningfully diluting shareholders again. If results are only incremental, what is your stop-loss plan and how will you be accountable to the market for every dollar spent?
Well, so the nice thing is that we don't need to go to market for 2 years. We are fully funded. So that really does change our strategy, because originally when we first came to the market with this story in Q1, our vision was 2,000 to 5,000 meters. And when you have a smaller program like that being designed, you have to make every meter count from a short-term perspective, because you do need to raise money. And ultimately, if we're going to get this thing to 3 to 5 million ounces, we need to actually miss, right? Because we need to find the boundaries as a deposit. So that means drilling outside of where they know there's gold. And you're not going to find, ultimately, like there's some point you're going to find, there's no gold here anymore, right? But you're only going to have that luxury when you have money. And so for us, as we've grown the size of this program, we designed 20,000 meters, but now really this 20,000 meters has changed because it's fully funded. Now we're actually going out there. Look, we're going to be drilling. We have one rig going on right now. And this is just our first 3,000 meter program here. This very, just a pilot program. We're going to go up to 2 rigs next year to accelerate drilling, accelerate results. And really, it's going to be every quarter assessing what we're finding and refining our own models to continuously deliver growth, right? Because ultimately, we rely, this resource that we have historically, I think is fairly reliable. We're relying on it. And if we come back to the market and say, hey, we have 900,000 ounces, people are going to say, okay, well, we already knew that, right? Like, great. So for us, it's all about growth. And so our plans have shifted to now delivering as much growth as we can on this historic resource as we bring this one current.
Fair enough. Okay, Deepak, permitting and logistics are really sexy, but they are where projects actually live or die, actually. So you received those permits and mobilized rigs to site. What are the single biggest operational risks you're managing right now on the N2 program, from permitting to community relations to winter access and assay turnaround times? I mean, give us some specifics about timelines and contingency plans if labs are backlogged or if weather forces you to pause.
So, I mean, obviously there's always, you can't fight Mother Nature, but this is, you can drill here year round. The logistics are great. We're 20 kilometers away from Matagami. There was a mine that was operating as recently as 2019, literally adjacent to our property. The head frame is 10 kilometers away from main deposit. So you know that there's no issues when it comes to long-term perspective from development with mining this deposit. The First Nations in the area are obviously very familiar with mining, very supportive of this as an industry. The Abitibi is a phenomenal place to work, over 200 million ounces, produced. So, I don't necessarily think there's any risk from a permitting standpoint or a First Nation standpoint when, we've done our due diligence, right? We've worked with them when we were even permitting this current drill program. So we did a lot of consultation ahead of time before we even submit any permits, just to make sure people understood who we were. We're the new kid on the block. We want people, we don't want to just come in and, here's the drilling, take it or leave it. And we actually went out and actually, after we received our initial permit, there's another 30-day work notice you have to put out. We received a request to delay the drilling and to go through further consultations, and we did. And that's why the drilling was actually delayed till very recently. And I think that shows how much attention we're paying to making sure that our partners here feel valued. And so I think realistically, barring some crazy weather event, we should be able to drill year round here. And long term, we should be able to, as we move this thing towards a mine, become a mine.
Great. Now, further to your information you just gave us about the partnerships with Indigenous communities, tell us further about how you are involving them in your projects and your exploration.
So right now, we have them helping on site, right? This is a very straightforward program. It's not, we're drilling, right? I mean, we're drilling a much larger program than a smaller company would be, but essentially we're doing the same thing. So we have them helping us in capacities that they have available on site. I think long term, we'll see them participate more as this program advances, but, we have them coming on site, working with us, pretty much anything except the actual drilling, because the contractors we're using are local French guys. So,
okay. Let me ask the toughest question nobody seems to be asking out loud right now. If 12 months from now, that market is indifferent to your results and larger producers are not knocking on your door, what is the most likely reason you would give investors in a blunt boardroom style debrief? I mean, which technical or commercial failure mode keeps you up at night? And extending to that, what will you do differently today to mitigate that risk so this company does not become yet another well-financed story with no path to takeover or serious resource economics?
Yeah, it's a good question. I mean, I think that the drilling is what's scary, right? It's the most exciting part of any story and also the most scary part of any story. So many stories die on the drill bit. And I think that in 12 months, the risk is that we've grown, we're confident we're going to grow this deposit, but we haven't grown it to a meaningful amount that people are interested, right? I think that a couple of things that we're looking at right now, being the big kid on the block to help mitigate that, is we are looking at M&A, right? So until now, we had done nothing but flow-through raises and charity flow-through raises because we put the money in the ground. We make the money work. This time around, we did raise hard money, and part of that is because being well-funded, we know there's opportunities, adjacent within the district to consolidate where you have companies that are, it's still a tough market. I mean, the gold is great, but it is a hard market. And so we have other targets in the area that we think are very accretive along this deformation zone to build a bigger story. in 12 months, we find out that this thing is only 1.5 million ounces. What I would say is that likely, if gold goes where we are, this will still be a mine, right? The old deposit was done at 0.5 gram cutoff, a 2.5 meter mining well. So the mining width is great. The cutoff is too high. In today's market, you see all the time quarter grams. I've seen even 0.2 grams, right? This is in Quebec. Like I said, there was a mine operating as recently as 5 years ago adjacent to our property. So, I firmly believe that we would be able to deliver a small mine here. But I think everybody wants to see this thing be 3 to 5 million ounces. I mean, that's our target. That's what we see. Look, we see on this project. So I think the way to really grow this deposit outside of just the A zone, the RJ zone, is, it's kind of cool. You see it and you look on a map, it kind of forms like a Z, right? There's what looks like a block that's faulted off to the southeast, and it's never been explored, really. There's been a handful of holes. They've had great gold hits. But when we look at this, we see over 5 kilometers of strike, which is literally virgin strike, undrilled, untouched. And so that's the work that we're doing on this project. It's a huge project, right? There's a lot of ground here where we see, outside of this simple, let's go drill the 5 main mineralized zones. Let's go find some new targets here that, Balmoral found, Walbridge found. Now that we have the money, we can go explore and focus. And that's what I mean when I say with 20,000 meters to spend, we can take some risks, right? Because those risks are what ultimately going to pay off if we want this thing to be a big gold story.
So great. I'll bookend this conversation here. I know these were some tougher questions, and it's ones that investors are very keen to know. So thank you again for joining us and for all the insights.
I'm looking forward to coming back.
Again, that was Deepak Varshney, CEO of Formation Metals, trading on the CSE under FOMO, and the OTC QB under FOMTF. Now, to learn more about them and their story, head over to formationmetals.com. This was The Market Front Lines. I'm Lyndsay Malchuk with Abaton Media, and join us next time.